So in today's video, we're going to be running through Visa versus Mastercard and which one should you own in 2025. This will be the ultimate cash flow showdown on growth, dividends and long-term potential, as both are really quality companies, but it is great to break them down as they follow the exact same financial business within two companies. So over the past decade, Visa and Mastercard have quietly become the two most powerful financial businesses in the world. They're not just credit card companies, they're the toll booths of the global economy, taking a slice from every swipe, tap and click. But if you could choose only one, which stock deserves a spot in your portfolio? Let's break it down and look at all the data that we've got so far. So what do these companies actually do? They both are payment networks, not banks, so they don't lend you money, they just take all transactions. Their revenue comes from fees from the bank, from merchants and processors. Think them as the digital place for global spending. Whenever you tap your card or make a transaction, you'll probably, Visa or Mastercard will probably get some kind of fee from that. They benefit whether people buy trainers, plane tickets, crypto, inflation, it doesn't really matter. They're going to get paid regardless, no matter what it is. So on market share, who is leading the pack? So right now, Visa have 50% of the global market share of the card transaction market. Mastercard at 25%. And then we have other companies such as Amex, Discover, etc., all within around 25% in that bracket. So Visa leads in transaction volume and actual reach, but Mastercard is catching up fast with innovation and global partners. And I'll show you exactly why in a second when you look at the revenue. So financial showdown, Visa versus Mastercard. So as you can see, Visa market cap is at 652 billion, which is massive. But Mastercard is slowly catching up there. They've just reached 500 billion, which is really, really good. Especially for only 25% of the market share. And Visa's got 50%. But Visa hasn't got double the market cap to what Mastercard has either. So there's a lot of growth to come within Mastercard. So the 5-year revenue growth, Visa is at 11%, whereas Mastercard's at 14%. So the actual net profit margin, Visa do better on 52%, whereas Mastercard is 45%. But don't take this the wrong way, 45% is huge. 52% is huge on net profit. I mean, out of every £1, Mastercard are getting 45p on net profit, which is crazy. The return on equity for Visa is 45%, but Mastercard is 150% plus. So the return on equity is massive for Mastercard. Dividend yield on Visa is 0.8 and Mastercard is 0.6. These are not known for the massive income generation. These are known for the growth compounders. So you'll have a low starting yield, but the yields will compound over the years as they grow the dividends every single year. So the PE ratio for Visa is 31, whereas Mastercard is 35. EPS growth has also been massive over the last 10 years, with a CAGR of 17% for Mastercard and a 15% CAGR for Visa. So Visa equals scale and stability, and Mastercard equals faster growth and efficiency. So beyond the debit and credit cards that they've got, this is where they are heading right now. They are not just any card business anymore. Both companies are evolving into payment ecosystems. Visa, they have partnerships with Fintech such as PayPal, Square and Stripe, real-time P2P and gig economy payouts with Visa Direct. They are also expanding into embedded finance, which is another sector that they're going to obviously get the market share of. And then we look at Mastercard. They're big on cybersecurity. They're moving forward with AI, with the ID tech, where you have to verify yourself with your identity. Mastercard have got the fair share in that. Mastercard have got the fair share in open banking interactions across Europe. And they've got strong APAC expansion, which is Asia Pacific. So they also have the fair share in that. So let's have a look at dividends and buybacks then. Quiet compounders. If we look at the price return for the S&P 500, Visa and Mastercard over a 10-year period, Mastercard have got 501.61%, where the S&P 500 have got 202.38%, and Visa has got 424.5%. So just on price return alone, Mastercard is winning that round. They don't have massive yields, but the dividend growth rate and the growth is rather impressive. So while we've got all this growth, we're still compounding this dividend. 17% for Visa over 10 years and 20% for Mastercard. Both are buying back billions in shares, shrinking supply, and also growing your percentage of ownership every time they do this. These are compounding machines, small yields now, but growing income streams over time, and also massive growth in them. So let's have a look at total returns for Visa and Mastercard. So as you can see, if we look at the total return basis for Mastercard over a 10-year period, we've got 538.26%. The S&P 500 has done 202.38%, and Visa has done 462.39%. So again, on a total return basis, Mastercard is winning that pack. As of June 2025, this is including reinvested dividends. The 1 year for Visa is 31.7%, where Mastercard's 25%. The 3 year is 75.2% for Visa and 70.4% for Mastercard. The 5 year total return is 88.8% for Visa, and Mastercard is 93.2%. And then the 10 year total return for Visa is 462.4% and Mastercard is 538.3%. So both Visa and Mastercard have delivered over 5x returns in a decade, with strong dividends and unstoppable global demand fueling the compound machine. These are some of the strongest compounders on the entire market, even beating the S&P 500 hands down, even 2x in the S&P 500, which is really, really great. So let's have a look at what these actually cover. So if we look at Visa, we cover the US and Latin America. This is where most of the card transactions come from. And then the Mastercard dominates mostly Europe and APAC, which is Asia. Holding both gives you global diversification across different regions, especially if you're betting on global growth. A couple of risks that we really need to watch though is regulation, especially in EU and US. They can cap the fees on banking and antitrust laws, etc. All these kind of things can come into play and stop Visa and Mastercard. Fintech disruption, such as Apple Pay and Stripe, these kind of things like Klarna, Revolut, these can all disrupt Mastercard and Visa, so that's another thing to watch out. And crypto. Some crypto alternatives are a long-term threat towards these kind of companies. But don't forget, Visa and Mastercard are also integrating crypto rails and adapting behind the scenes. So they are taking crypto on board as well. So it is really good that they're taking those kind of steps. 2025 catalyst to watch: growth in contactless and mobile payments. There's also fraud detection led by AI, equals stronger margins for these companies. Travel and cross-border spending boom post 2020, and also central bank rate cuts equals more consumer spending, which equals more profits for Mastercard and Visa. So let's have a look at a long-term wealth simulation. So what if you invested £10,000 in 2015? So we've got two stocks right here. We've got Visa. So if you invested £10,000 in 2015, the value you would have right now in Visa would be 217,000, and in Mastercard 278,000. So this is massive, massive growth, compounding wealth over time. So if we look at Mastercard, this is even growth without dividends reinvested. If we look at Mastercard, $278,544 over 15 years compounded. Wow, that is huge. Then we look at Visa. If we look at with distributions reinvested for Visa, would be £217,716, and if you didn't even reinvest the dividend, you get $203,027. So even without reinvesting the dividend, you are getting massive, massive growth, and that is like a 20x, 25x from £10,000, which is absolutely crazy. So what's in my portfolio? Currently, I hold a Mastercard. It has stronger growth, faster dividend hikes, and incredible capital efficiency. Strong profit margins. They're a compounding machine. But to be honest, guys, owning both or either one wouldn't even matter. As long as you've got a long-term mindset about this and you're going to invest for the long term, it really doesn't matter. Holding Mastercard or Visa, having either of these in your portfolio will do very good long term. So final takeaway: whether you're after long-term dividend growth or future-proof Fintech exposure, Visa and Mastercard are elite quality stocks. They have wide moat, they have a global brand, so they're very trusted. They have fat profit margins on anything that they do. They are steady compounders and they building wealth over time, not just income. These are really wealth building tools. So let me know, guys, in the comments, what do you prefer? Do you prefer Visa or Mastercard? Which ones do you hold in your portfolio, or do you hold both? Please let me know in the comments, guys. I would really love to know. So thank you, guys. I will
talk about Snowball. If you want 10% off Snowball, please use the promo code below and my link below, Cashflow King, to get 10% off. If you would like to use my pie so you can invest exactly the same as I do and the rest of the people who have also copied my pie, a lot of people have also pulled the trigger on this. If you want to join a Discord also with other like-minded investors, you can do that. Join our Discord, guys. Let's get talking.
Please remember to hit that like and subscribe button, guys, and also hit the notification bell to keep updated with future video. Thank you, guys, and I will see you in the next one.